Yeah, no, I mean, it's really gathering pace. I think we've got to look back a little bit further to the summer. China started to introduce rationing of electricity when we knew this shortage was coming back in July. We had strong summer demand, pretty poor summer hydro. So this hasn't just crept up in the last few weeks. What it has led to, of course, is an examination of the fundamentals. Is China lined up to supply enough coal? Does it have access to enough gas? And as it's coming into the market now, does that really have an inflationary impact on prices that we've seen recently? But I wouldn't want to overlook the policy decisions that have helped support this. China's drive to push down the emissions intensity and the energy intensity of those big sectors like steel and cement and chemicals, which drive a lot of that industrial power demand. So I think we've got a combination of policy and fundamentals combining here in China.
To what extent has the difficult relationship with Australia contributed to this, Gavin? Because I think a lot of state entities were under pressure to toe the government line, and that may have had an impact on coal and other energy imports from Australia.
Yeah, I think it's a tale of three commodities there. And LNG, liquefied natural gas exports, primarily under long-term contracts, remains more or less intact. Iron ore has expanded clearly. Australia is the number one supplier to China, and China hasn't effectively used those hasn't weaponized iron ore. Thermal coal exports have been minimal to zero since 2000, and so thermal coal exports, where China felt it had more flexibility through domestic production and other import sources, has really borne the brunt. And of course, tightness in the market as China's supply crunch increases, has left those questions open. Would China go back to negotiation with Australia over thermal coal, or will it continue to look primarily to its domestic resources if it can ramp those up quick enough?